Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Welcome back to the Ask Ralph Show. You know, one of the questions I get a lot in my practice is, how long am I supposed to keep records, Ralph? And I bet I get asked this several times a day. Well, there was a little research that I did, and I found a great article that ran in Consumer Reports magazine on March 8, 2018, and it's called How Long to Keep Your Tax Records and Other Documents. And I really find that the author of this was really on point of how to handle this. You know, basically what he's saying here is that tax time is the perfect time to start putting your records together. And it's also a great time to take a look at what you need to discard and what you need to keep. And one of the clear points he makes here, or she makes, actually I don't know if it's written by a man or woman, but it's written by Consumer Reports, is that the first thing it's going to do is reduce tax preparation stress. And that makes a lot of sense, because when you're putting your documents together, you know, you'll find all the things that you need to prepare your tax return. But then once you've got that done, the next question is, you know, how long should you keep these records? You know, and clients ask me, you know, Ralph, I understand that, you know, there's a 7-year statute of limitations. Well, and I have to tell them, well, it really depends. So, and it, not just for taxes, but there's another reason, and that is, you know, if you're having a meeting with your financial advisor or your attorney, you don't want to be wading through a bunch of paperwork trying to find the documents that you need. They also mention this, you know, what happens if there's a fire, flood, or theft? You're going to have, you know, your hands on these essential documents right away, especially, you know, if your family needs, if you become ill, you know, you're going to be looking for your health care, power of attorney, insurance policy, medical records, and any outstanding bills. So one of the things they mention here is to divide your papers into 4 basic categories, and that's papers you need to keep for the calendar year or less, papers that can be destroyed when you no longer own the items, they cover tax records, and papers to keep indefinitely. And I think this is a really good guide for most people to use. So let's start with the first one, and that's things to keep for less than a year. In this particular group of things, you're going to store things like your ATM, bank deposits, and credit card receipts. And you can basically keep them until you reconcile them with your monthly statements. And once you've done that, go ahead and shred those paper documents. You're going to do that to avoid identity theft. Or, you know, you can also put those securely in trash electronic files unless you need to support them for your tax return. You know, you're going to want to keep insurance policies and investment statements until the new ones arrive. But once you get that new one, you can go ahead and discard it. Now, the second category they mention here is these are things to keep for more than a year. And one of the things they mention here is loan documents. I don't know how many times I've asked a client, you know, do you have a copy of your loan documents, maybe for a car loan or a home equity loan? That's going to become really important here in 2018, because one of the things that the tax law changed was the deductibility of home equity loans, and you're only going to be able to deduct those if those funds were used to either purchase a home or to make improvements to your home. So one of the things that I suspect the IRS is going to put into the code is a need to keep track of those records. So that's something we definitely want to keep in mind as we're working through this and deciding what documents to keep. Now, the other thing they talk about here, you know, if you own one or more vehicles, hold on to the titles until you sell them. I guess that's pretty self-explanatory. And frankly, like a lot of people have loans for them, so they don't even see the titles. But if you do have them, you want to keep track of them. You also want to keep track of any investments you have in stocks, bonds, and mutual funds, or anything else. You want to keep those confirmations of when you bought those things, because when you go to sell them, you're going to need that information for the basis. Again, I don't know how many times I've seen this happen, where a client will come in and say, yeah, you know, I changed brokers a few years back and I had to sell this stock. And, you know, a lot of times the brokers now are reporting on the investment statements, you know, what was the adjusted basis, they call it. Basically, what did you pay for those things? But in some cases, when they've changed hands from one brokerage house to another, that information just isn't available. So this is really key to keep track of these things. You know, the annual statements. I have one client, his name is Bob. I won't use his last name because I don't want to embarrass him, but actually he's a really good guy. But one of the things that he has is he calls it the Bible, and he brings his investment. It's a big 3-ring binder, and it basically is his whole investment, you know, situation. And he's got the statements from when he retired to the current year. And he always jokes at me and he says, Ralph, do I need to bring the Bible this year? And, you know, I've told him over time, you know, as we start to get more of a feel for what's going on, you don't need to bring that. But what he's getting at is, you know, he's got his his information, put together in a way that if he needs to find them, he can get right on top of them. So that's really important. And these are the documents to keep for more than a year. Now, the next area is those documents you keep for 7 years. So let's talk a little bit about tax structure here. And it's one of the things it mentioned here is if you fail to report more than 25% of your gross income on your tax returns, the government has 6 years to collect the tax or start legal proceedings. So when it comes to determining how long to keep tax records, electronic and paper, we recommend 7 years just in case. And that generally is my go-to answer when a client asks me about their tax records. Now, the only caveat I will add to that is if you have your own business and if you have employees, I would generally keep those records as long as you can keep them, because you never know when you're going to need to go back and get those. And I hate to say this, but generally, you may need to have those things. Now, I've not personally seen many audits to go back more than 6 years, but I have seen a couple. And in those cases, I find it sometimes the IRS doesn't even have the documentation, and a well prepared tax preparer tax filer who has all these documents is really in a much better position to defend themselves against these things. Now, the last category here is those items you keep forever, and that's essential records. And these are kind of common sense, birth and death certificates, marriage licenses, divorce decrees, Social Security cards, and military discharge papers. I had a vet in not too long ago, and I can't remember the number he told me about, but he said every vet you ever talk to will know exactly what this number or what this form is. And you want to hold on to those things like defined benefit plan documents, estate planning documents, life insurance policies, and inventory of the things that you have in your possession. Now, the next question you might be asking is, how do I store these things? And one of the things they recommend here is using a fireproof safe or password protected electronic file for the following. That's your bank and investment statements, estate planning documents, pension information, insurance policies, pay stubs, tax documents, and your safe deposit box inventory list. And I think that's a good plan. One of the things that we do in our practice, we recommend people, not only keep a paper copy of things, but also, an electronic copy of those things. I saw a person on Fox News the other day, and they were talking about, put all your important medical and legal documents onto a thumb drive or a flash drive and have that thing with you, because you never know when you might need to be able to get access to those things. And I thought that was a really good idea. The other thing you might want to consider is vesting in a safe deposit box for papers that can't be easily replaced, like your original birth and death certificate, Social Security cards, passports, life insurance documents, marriage and divorce decrees, military discharge information, vehicle titles, and inventory of your home's contents. And that's one thing I don't want to miss. One of the things that you need to take time to do is make a inventory of your home contents. That's in case you ever need to make an insurance claim. If you ever are the victim of a robbery in your home, and the first thing the insurance company is going to want to say is, okay, what was taken? So one of the things that I recommend is making a list of those things. I would also recommend, and I've seen this done by a few clients, is take pictures and also take a video and just basically, walk around each room of the house and identify those things that are there, so that in the event that you need to make an insurance claim, you can do that. And I think this is really good information. I definitely recommend taking a look at this article. Like I said, it ran in Consumer Reports, How Long to Keep Tax Records and Other Documents. And I like the idea of the 4-prong approach. So I really hope this was helpful to everyone listening today.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware, and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.